Okay, the previous class we have detailedly discussed about the question paper pattern. So we are having how many sections? Two sections. In the section A, we are having the MCQs, and in section B, we are having the descriptive questions. Totally, they will use 7 questions. We need to answer 5 questions. So each and every every question they will ask for 14 marks. So 5 into 14, 70 plus MCQs, 30 marks. So we are not going to have any negative marking. So each MCQ is carrying 2 marks. So we no need to write any explanation also. Directly we can bubble. That is sufficient. Same like foundation. What you have done, they will give the OMR sheet. And in the same manner, here also they will give OMR sheet in front of the booklet. Okay, now in front of the booklet they will give the OMR sheet. You need to bubble it. You should not write the ABCD like that in our answer sheet. You need to bubble. So please remember, if you write the ABCD like that, they are not going to value anything. So in this class we have started the discussion of terminologies of accounting. So we are having the principles. So generally in accounting in India we are having the principles of generally accepted accounting principles. In this, one of the main principle is called as separate entity concept. What is the concept? No? Separate entity concept. As per this concept, what this concept is saying means owner is a different person and a business is a different person. Imagine, for example, as per this concept, owner is a different person and business is a different person. What is the meaning of this one, sir? So I will take one example. With the help of that, we can understand. Imagine he is a owner of the business. He is trying to start the business of so he trying to start the business. So he is a owner. This is a business. In order to start the business, what we need? We need an investment. So owner gives the investment to the business. Owner gives the investment to the business. Imagine the investment value at the rate of 10 lakhs. How much investment he is making? 10 lakhs. This 10 lakhs we are going to call it as what, ma? So as per accounting, this 10 lakh is called as nothing but this investment, this total investment we are going to call it as capital. The total investment is going to call it as what, ma? Capital. Not only in the form of cash, owner can bring in the form of goods or in the form of assets. I think you know what is the meaning of good. Good means what, ma? Any object or commodity which an objective of resale, whether we are purchase or whether we manufacture. For example, some of the businesses having the manufacturing businesses. For example, if you take the Reebok company, what they will do, ma? They will manufacture the bat and they will sell. So what is the ultimate objective of Reebok company? In order to resell the product or in order to use the product, in order to resell. Imagine we are having a electrical business. So we are having the laptops, cameras like that. So what is our objective? Our objective is to resell the cameras or to resell the laptops. So that here the laptops and cameras are called as goods. But if you take any manufacturing companies of cars, Example, Kia Motors, Indian company. So what the Kia Motors is doing, they will manufacture the car and they will sell the car. So here the ultimate objective is to resell or use. Ultimate objective is to resell. For example, we have started the business of Kia Motors. We have manufactured the car and we are using that car. We are using that particular car and then we are selling it. And then we are selling. Whether this is called as good or asset, in that situation, that car is called as an asset. Because why? We have directly resold, we have used and reselling. We have used and reselling. At that situation, we are not going to call it as good. That one is called as what, asset. Okay, I will say the examples, no problem. At this point of time, this is called what, capital. What is the meaning of capital, anything, okay, anything bring into the business by the owner is called as what, capital. Anything means what, he can bring in the form of cash, he can bring in the form of goods, so or he can bring in the form of any other assets other than cash. So, other assets, here cash is also called as what, asset only. Cash is also called as what, asset. If you bring any other asset also into the business, you are going to call it as what, capital itself. So here we need to repay the capital to the owner. We need to repay means each and every situation in the accounting point of view, we means business. We need to think in the every situation of accounting from the point of view of business. So why we need to think from the point of view of business, because of which concept? Separate legal entity concept. What the separate entity concept is saying, owner is a different person and business is a different person. Accounting will be done from point of view of business but not the point of view of owner. Okay, now imagine we are doing the account means, so we means what, we means business, we means owner. We means business. Always we means what, business. So the owner given, imagine owner given cash of rupees how much, 10 lakhs. That means owner given. Owner means what, he is a separate person, we are the separate person. Okay, now that means anything. For example, you have given 10 lakhs to me, I need to repay na? No need to repay na? I need to repay because you are a separate person, I am a separate person. Here I am taking my example. I means what, business. You means what, owner. You are given how much amount, 10 lakhs amount to me, so I need to repay na? No need to repay na? I need to repay. So in future the capital need to repay. In future the capital need to repay to the owner. So business need to repay capital. So anything we need to repay means that situation, that point is called as what, liability. Where the capital is called as asset or liability, capital is called as liability. What is the meaning of liability? Anything what we need to repay. We means what, obligation to repay. We means what here? We means business. Anything business need to repay, obligation to repay in future is called as a liability. What is the meaning of asset, sir? The asset means, okay, we can discuss some other point of time. So here we have started the discussion with what, GAAP. GAAP means what, generally accepted accounting principles. These principles we are following, we will follow only in India, okay na? Okay na? In America we are not going to follow the generally accepted accounting principles. Here only in India we are following what, generally accepted accounting principles. So in that principle, one of the principle is called as what, separate entity concept. What the separate entity concept is saying, owner is a different person, business is a different person. For that we need to think always from whose point of view? Business point of view. So anything owner given means it is called as what, capital. It is called as what, capital. So owner can give cash, goods or any other assets. Okay na? So capital we need to repay, so that the capital is called as asset or liability. Capital is called as a liability. So what is the meaning of business, sir? Okay, you are saying the business. You understand the concept of what ma owner. Owner means nothing but proprietor. We can call it as what ma proprietor. If any person who has started the business is called as owner. For example, next one. So we are going to discuss about what ma meaning of business. What is the meaning of business ma? So can you say what is the meaning of business? Meaning of business. It is an economic activity to earn the profit. In a simple understanding, okay, na, in my class, a place where goods are exchanged and services are rendered. A place where goods are exchanged and services are rendered. So this is a called as business. For example, if you take the Shikara tutorials, here what we are doing, we are providing the services, we are providing the goods, we are providing the service. So this place is called as a business or not? This place is called as a business. So here we need to understand the two meanings. What is the meaning of goods and what is the meaning of services? What is the meaning of good, ma? Okay, now object or commodity. An object or commodity purchased or manufactured with an objective of with an objective of resale or use resale, an objective of resale. So here the object or commodity, nothing but what ma. If you take the example of electrical items, so recently only I have taken example what ma, what we are doing, we are purchasing the cameras and we are reselling the cameras. At that point of time the camera is called as asset or liability. It is an sorry, asset or good ma, good. Okay, next I am taking certain examples. You need to decide whether it is a good or not. Okay na, example, we have started mobile business. Okay now, in this goods are called as what ma, nothing but mobiles. Mobiles are called the goods. Here what we are doing ma, here mobile can be purchased and resale. So purchased means what ma, anything we have purchases means that is nothing but purchases. So we have purchased and resale. Next, this mobile can be, what we can do, we can manufacture and resell. We can manufacture and resell, or we can purchase and resell. These are the two objectives. But what we should not do ma, after using we can sell the, no, after using we cannot sell the particular item. After using we are selling means it is called as asset. Okay na, so we should not do what we should not do ma, use and resell. We should not do the use and resale. Okay, imagine in the mobile shop we are having the second hand mobiles. Second hand mobile means what, ma? We are purchasing the second hand mobile, so some other person. For example, here we are having the shop. We are not purchasing the new products. We are purchasing the used product from some other person. Imagine Mr. X. Okay, na? Mr. X is selling used phone to the shop or business, and then what we are doing, we are selling to some other person. Mr. Y. We are selling to some other person whom Mr. Y. In this situation, this mobile is called as second hand mobile or fresh mobile, amma. Second hand mobile. Are you understanding the concept? Already Mr. X used the phone. X used the phone and then selling to us. And again, what we are doing, we are not using that phone directly. What we are doing, ma, we are selling to some other person. In this situation, the second hand mobile is called as good. Okay, now. But what we should not do after purchasing the mobile from that particular person, which person? Mr. X. Okay, now. And then we are reselling to Mr. Y after using that we are reselling means that particular thing is called as an asset, or understanding the total concept. In some situations we are having the second hand goods also. So even though any good you have to purchase and you have to resell directly, you should not use in middle of the situation. If you use that particular item, so that particular item is called as asset. Okay, now what is the meaning of asset, sir? Asset means, so with the help of asset, we can generate the future economic benefits. Okay, Nama. So we are using the camera. What we can generate with the use the by using the camera, we can record the classes. Okay, now after recording the classes, what we can do? We can sell in the market. After selling in the market of recording classes, what we will get, ma? We'll get the revenue. So we are using the camera for the purpose of generation of future revenue is called future revenue or income is called as an asset. Okay, nama. So this is how we have completed the discussion of meaning of good. So what is the meaning of good, ma? An object or commodity purchased or manufactured with an objective of resale. So we have started the mobile business. Here the mobiles are called the goods. So we can purchase and we can resell, or either we can manufacture and resell. But what we should not do, we should not do the use and resell. In some of the situations, we may get what my second hand mobiles. Even though if you sell the second hand mobiles also is called as a good. But that particular second hand mobile we should use or we should not use, we should not use in any situation. We should not use in any situation. So next we are going to discuss about the services. So we are having the some services oriented organization. What are, can you say any examples, ma? We're having some for example, education institute. If you take the Shikara, you are providing the services or goods, you are providing the services. Okay, now if you sell the materials means goods. Okay, now if you take logistic businesses, if you take bus services, Morning Star. Okay, now these are all called as what, they are providing the services, they are providing the goods, they are providing the services. Nowadays what we can do, ma, we are having certain apps like what, ma, if you if we want a plumber service means we can book in the app. Okay, na, easy. So they are providing the services, they are providing the no broker, yes, no broker app. In that no broker app, what we can do, we can if you want plumber services means we can book the plumber services. So carpenter services, like that, they are providing the services, they are providing the goods, they are providing the services. So a place where goods are exchanged and services are rendered is called as a business. So till now we have discussed the concept of capital. So capital means what, ma? Anything investment made by the owner into the business. Anything means cash, goods or assets. So we need to repay, na? We no need to repay, na? We need to repay in future. We are having a obligation to repay, so that anything obligation to repay for the business means it is called as liability. Okay, na guys. So up to here we have discussed the concept of liability, the concept of capital, the concept of owner, business, goods, etc. Next I am going to discuss about drawings. I'm going to discuss about the concept of drawings. What is the meaning of drawings? You already know. an amount withdrawn, and not only the amount, okay na, he can take over the goods, he can take over the assets from the business. So anything taken over by the owner from the business is called as a drawings. So anything taken over by the owner from the business is called drawings. Okay now, let me take an example. So he is a person, we need to start the business. So which business we have started, ma? Imagine the mobile business we have started. Imagine we have started the mobile business. So here what we are going to do, we are purchasing the mobiles and we are selling it, or either we can manufacture the mobile and we can sell. So in order to start the business, so we are making investment of how much? 10 lakh rupees. This 10 lakhs is called as capital. We already discussed. So that means how much amount we need to repay to the owner? We need to repay to the owner 10 lakhs. Now, so imagine we are in a February 14th. What is the date, ma? Today's date? April something. We are in a situation of what, ma? Imagine today's date is 14th February. What is on this day? What is the occasion? We are having the Valentine's Day. So we are doing the mobile business. So what the owner is doing, ma? Owner is having one girlfriend. So he need to give gift to the girlfriend. He need to give gift to the girlfriend. So okay, just a second, ma. So he has invested the 10 lakhs. So he has taken away the goods. He has taken over the goods. Mobile cost of rupees 1 lakh. Okay, na iPhone. So which thing he has taken over, ma? iPhone. So that means we need to collect amount from owner. So this is called as, he has taken away the mobile costing how much? 1 lakh. This is called as drawings, or this is called as capital. This is called as drawings. Here the owner taken away the goods or cash? Goods. Even though if we take the goods, or even though if we take the cash, even though if we take any asset from the business, it is called as drawings. So net effort. What is here the net effort having? So he has invested 10 lakhs and he has taken over the 1 lakh worth rupees of good. That means how much amount we need to repay now? Now we need to repay only 9 lakhs. So how did we get the 9 lakhs, ma? 10 lakhs minus 1 lakh. Yes or no, ma? If you do like this, how much amount we are getting? 9 lakhs. So what you are doing here, from the capital, you are reducing the drawings or increasing the drawings sum? You are reducing the drawings. Then this capital is called as, we are going to call it as opening capital. This capital is called as what, ma? Opening capital. Nothing but initial capital we can call. Then what? Then 9 lakhs rupees is called as closing capital. We are going to call it as, the 9 lakhs is called as closing capital. 10 lakh is called as opening capitals. So we are having some other adjustments. I will discuss one by one. Okay, now. So till now we have discussed the meanings of capital, drawings, goods, services, business, assets, and liabilities. Okay, now meanings we are learning. So in the next class we can discuss about what, ma? Types of assets, types of liabilities, like that. Okay, next I'm going to discuss some other concept called as interest on drawings, interest on capital. Okay na guys? Okay. Before that, I will discuss one example. After that, you can understand about the interest on capital and interest on drawings. Okay na? So imagine business. Here is the business, and we are having HDFC Bank. We have taken a loan from the bank. What we have done, ma? We have taken a loan at the rate of rupees 1 lakh. Okay na? So this loan we need to repay na? No need to repay na, ma? We need to repay. We are having obligation to repay. So the loan is called as asset or liability. Liability. Okay na? On this loan, what we need to pay, ma? We need to pay the interest. Okay na? Every year we need to pay what? Interest. So we need to pay the interest to the bank. Imagine interest at the rate of 12%. Imagine interest at the rate of 12%. So 1 lakh into 12% means how much? 12,000. This 12,000 we need to repay na, or bank will repay to us. We need to repay or we will pay. Every year we are going to pay. So this 12 lakh is called as nothing but what, ma? Interest. This interest is an expenses towards the income. It is an expenses or income. It is an expenses because we are paying, a bank is paying to us. We are paying to the bank. This is called as expenses. Nothing but this interest is nothing but interest on loan. Interest on loan. Okay, now we have taken the loan. We need to pay to the bank is called as interest on loan. It is a expenses income. It is an expenses. So now the same concept is applicable for interest on capital also. The same concept is applicable for what, ma? Interest on capital. Now imagine here the owner, or here business only. Imagine here the business and we are having the owner. Now owner is making investment to us. Yes or no, ma? He is giving a capital. He is giving a capital. Here the capital is asset or liability, ma? Liability. On this liability we need to pay what? Interest. This interest is called as interest on capital. Okay na? This interest is called as what, ma? Interest on capital. So for us the interest on capital is an expenses or income, ma? Expenses. Expenses, ma? It is not an income. Interest on capital is a expenses. Okay na? Because we need to repay na, owner need to repay na. We need to repay. We need to repay to the owner. We need to repay to the owner. So that interest on capital is called as expenses. Interest on capital is an expenses. Even though it is an expense, we are not going to repay to the owner. We are going to repay, we are not going to repay, amma. We are not going to repay to the owner, but just we will add back to the capital. Just what we will do, ma? We will add back to the capital. In future we will repay. Okay na? When we will repay the capital, ma? At the time of winding up of business. Okay na? Without the capital we can do the business, or we cannot do the business. We cannot do the business. If we want, okay na? He is not going to get any salary. For example, he is working means what we will pay? We will pay the salary. But he is working, he has made the investment. He has made the investment for his daily needs. Okay na? What he will take, ma? He will take the drawings. Okay na? Drawings means nothing but what, ma? Whatever the uses he is having, he will use from by way of taking the cash from the business. Or if you want goods means you have started the grocery shop. What we will do? We will take from our shop, or we will purchase from outside. We will take from our shop. Okay na? Uses can be for use, we can give the money. Okay na? Directly we are going to repay the capital. So without the capital we cannot run the business. Without the capital we cannot run the business. So that what we will do, okay, we need to repay to the owner. It is an expenditure. Okay, I can understand. But in the accounting point of view, what we will do the adjustment ma? For the capital, we are going to add back the interest on capital. Okay na? Because we need to repay to the owner, owner need to repay to us. We need to repay to the owner. Okay na? Capital is also we need to repay na, owner need to repay na. We need to repay. Interest on capital also we need to repay, so that we can add or we can less. We can add. Okay na? Drawings we need to reduce, we need to increase. We need to reduce. Okay na? Capital minus drawings plus interest on capital. Okay na guys? So next, in the same way, if you take the interest on drawings, minus a plus a minus, because why ma? Interest on drawings also who need to repay? Owner need to repay to us. Owner need to repay to business. So okay na? So here what is the statement we will get, sir? The statement of capital. So you need to remember the statement of capital. What is the statement of capital, sir? Particulars. An amount rupees. So we are starting the capital. That capital is called as nothing but what ma? Opening capital or closing capital? Opening capital. So opening capital so we are not taking any example. So opening capital. For this opening capital, what we need to do? We need to reduce the drawings. So minus drawings. Next, what we need to do ma? Interest on capital. What we need to add? So we need to do add interest on capital. So bracket you can write expenses or income amma. Expenses. Next, minus interest on drawings. Interest on drawings, income or expenses amma? Income. Who will repay to us? Owner need to repay the drawings and owner need to repay the interest on drawings. For that reason, what we are doing? We are reducing the capital. So we need to reduce it. For example, okay, in the middle of the business, we are not having any sufficient capital. What we will do? We will bring again the capital. That capital is called as additional capital. Okay, na? Again the additional capital. We need to repay now. Owner need to repay us. We need to repay. So we need to add. We need to less. We need to add. So we need to add additional capital. Need to add additional capital. Then we will get the ultimate result. That result is nothing but what ma? Closing capital. So in this class, we have discussed the complete discussion about capital. First of all, what is the meaning of capital? Anything which is brought by the owner into the business. So whatever the things he can brought ma, he can bring the cash, he can bring the goods, or he can bring the any other assets. Okay now, so we need to repay to the owner, so that we are having obligation to repay. So capital is called as a liability. Next, what is the meaning of drawings? So anything taken away by the owner from the business is called as a drawings. Okay na, drawings means we need to repay na, owner need to repay na, we need to repay. So that we need to reduce, we need to increase, we need to reduce from the capital, because we are not going to repay directly. So instead of, we need to repay to the owner 10 lakhs, So he has taken away the goods worth rupees of how much, Amma? 1 lakh. That means we can reduce the drawings from the capital. Then after interest on capital means again we need to repay to the owner, so that we are adding it. And interest on drawings, so we are going to collect from the owner, so we need to reduce. Anything we are going to collect means reduce, we are going to pay means add. Okay, now next additional capital, we are going to add or we are going to less sum, we are going to add, then we will get the closing capital. Okay na guys. So next, okay, you know how to write the journal entries. Okay na, you know how to write the journal entries. You have used the approach called as traditional approach. Which approach, Amma? Traditional approach. So now we are going to discuss some other approach. Okay na. So now we are having only 10 minutes time. Okay, I will try to say, but if we are having only 10 minutes left. Okay na, I will try to say. If you are not getting anything means I will explain tomorrow, no problem. Okay na. So is there any doubts up to here? No kada. So already you know all the things from the previous foundation itself, but once we are revising all the things, that's all. Okay na. So generally account is having which shape, Amma? T shape. Account is having which shape? T shape. You know, left hand side is called as debit side. Okay, now what we will write, ma? DR. What is the meaning of DR? Debit record. And the right hand side is called as credit record. So do you know the dealer spelling? Dealer spelling. Dealer spelling. What is the spelling of dealer? Spell. D E A L I, not L E R. Okay now guys, I am writing DEA on debit side, LER on credit side. This is a shortcut. Okay now, this is a shortcut. For which approach? Modern approach. Okay now, for which approach, Amma? Modern approach. This is another way of accounting. Another way of accounting. This is a shortcut. Okay now. So here I am going to say D for drawings. D for drawings. E for expenses. A for asset. A for apple. Asset. A for asset. L for liabilities. E for equity. Equity can also be called as capital. Next, R for revenue. Revenue is nothing but income. We can call it as, okay, revenue is nothing but sales only. We can concluding as what, ma? Income. So this DEA is presented on which side? Debit side. Is presented on which side, ma? Debit side. So that I am taking these three balances. These three will have, are going to have the debit balance. These three things are going to have which balance? Debit balance. And these three things are going to have which balance? Credit balance. Okay na? Now we can understand what is the meaning of debit balance and what is the meaning of credit balance. So D for drawings, E for expenses, A for assets, L for liability, C for equity or capital, so R for revenue or income. That means drawings, expenses and asset are having which balance? Debit balance. Liability, equity, revenue and incomes are having which balance? Credit balance. So please remember these balances. So if you see the drawings, again it is an asset. Next one, if you see the capital, it is a liability. Okay na? It is a liability. To conclude, so in accounting we are having only four items. What are the four items? Expenses, incomes, assets and liabilities. In these assets and expenses will have the debit balance, and next liabilities and incomes will have the credit balance. We are having only four items. What are the four items? assets, expenses, incomes and liabilities. Remember like this: assets, expenses, incomes and liabilities. Assets and expenses will have debit balance. Incomes and liabilities will have credit balance. So what is the meaning of debit balance? Okay, imagine we are taking a ledger. We are taking one particular ledger. Okay, now debit record and credit record. In the debit side, we are having a amount of 10,000. The debit side, we are having a amount of 10,000. On credit side, we are having a amount of 8,000. Okay, now we have recorded something, but how much amount we are having in the debit side? 10,000. How much amount we are having in the credit side? 8,000. Okay, now which side is more? Debit side is more than credit side. That means this particular account is showing which balance? Debit balance. Debit balance means in a particular account, debit side is more than credit side. It is called as debit balance. So what is the meaning of debit balance, Suma? Debit balance means any account in any account debit side is more than credit side. Debit side is more than credit side. Then that is called as which balance, Amma? Debit balance or credit balance? Debit balance. Then what is the meaning of credit balance? Credit side is more. So what is the examples are here? Imagine this is an account. So debit record and credit record. Now we are having 8,000 on the debit side and 10,000 on the credit side. Which side is more? Credit side is more. What is the meaning of credit balance? So any account, credit side is more or debit side is more, Amma? Credit side is more than debit side. Then that account is showing which balance? Credit balance. So remember what are the four items we are having? Expenses, assets, incomes and liabilities. Expenses and assets will have debit balance. Incomes and liabilities will have credit balance. So what is the meaning of debit balance? If the debit side is more than credit side, is called as a debit balance. If the credit side is more than debit side, it is called as a credit balance. So this is how we have discussed. In the next class, we can continue this discussion. Okay, now modern approach was not completed. Just we have learned about the balances. So here the assets and expenses will have which balance? Debit balance. Incomes and liabilities will have which balance? Credit balance. So now what the modern approach is saying means, if the debit balance increases, the debit balance increases, what we need to do, ma? We need to do debit. We need to do what, ma? Debit. If the debit balance decreases, what we need to do? Credit. Okay, guys. We are not understanding about the increases, decreases, sir. For example, asset. If you purchase the asset, okay, na, asset value increases or decreases, sir? Increases. Okay, na. If you purchase the asset for cash, means we are having the two outcomes, asset and cash. Here the cash balance decreases. Cash balance decreases, asset balance increases. So what we are going to do? Both are assets. Both are assets means what, ma? Both are having which balances? Debit balances. But cash is decreasing. What we need to do? Credit. Okay, now building value. For example, we purchase the building. Building value increases. What we need to do? Debit. What is the entry we will write? Building account debited to billing account debited to cash account, like that. Okay, now I will explain you, no problem. Next, what is the meaning of credit balance? Credit side is more than debit side. If the credit balance increases, what we need to do? The credit balance increases, we are going to do credit. And if the credit balance decreases, what we need to do, amma? Debit. So this is the modern approach. This is the modern approach. So how we can understand whether it is increasing or decreasing? Whether the, always remember, most of the 90% expenses and incomes will always what? Increases. Will always what, ma? Increases. Expenses will increase and incomes also increases. In some of the situations, incomes and expenses are will be decreases. I will say that situations also, no problem. So what the modern approach is saying, ma? So expenses and assets will have the debit balance. If the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. And liabilities and incomes are having which balance? Credit balance. If the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. So this is which approach? Modern approach. And we have discussed the concept of capital. For the capital, we are going to add what, ma? We are going to add interest on capital and additional capital. We are going to reduce the drawings and interest on drawings. Then we will get what, ma? Closing capital. So this is how I am ending the section. Further discussion will be continued in the next class. Thank you. Have a nice day. Bye bye.